The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Oh, we saw a little bit of green on the screen in the grain and oilseed markets on Wednesday. Kind of maybe felt like a bit of a consolidation type of day. Some different factors at play we need to discuss here on the show today. A little pressure in livestock, though. Outside markets, stocks were up. Energies, crude down a little bit again. Kind of just felt like a mixed tone across the board here on Wednesday's session. Let's talk about things. Joining us for market analysis today, Mike Zuzolo with Global Commodity Analytics. Mike, good to catch up with you again, sir, and hope you're having a great week so far.
Doing good, Jesse. Getting prepped for Friday's WASDE report. We had the Federal Reserve come out here a little bit ago. Doesn't look like they shook the pillars of anything, so that's good news. Let's hope USDA kind of does the same thing on Friday with their numbers.
Absolutely. I think that's a great place for us to start our discussion today, with it being a somewhat quiet day on the board Wednesday. You mentioned it, Friday, WASDE report coming up. And let's talk about this, talk about some of the pre-report estimates, October report. We expecting any major changes, Mike? Walk us through what you're thinking as we head towards Friday.
You know, I am in terms of the world wheat ending stocks. I think there's several literally hot spots going around the world right now. And I think we've opened ourselves up, Jesse, with the WASDE report looming. I think we've opened ourselves up and find ourselves in the middle of a global drought, and that the trade is watching it. Traders are finally taking note of the tight world stocks of grains, especially something you and I have talked about for the better part of 6 months as far as world wheat and world corn stocks and stocks to use ratios. And just as importantly, if not more importantly, we are seeing the demand come in. End users are jumping in. You know, we're seeing Algeria, we're seeing South Korea, we're seeing a lot of activity in the grains, and we've had some good activity in the soybeans as well, but the grains have been lacking here, especially the wheat, in the past 2, 3, 4 months. Just saw today, for instance, that the Ukrainian corn price has now hit a 1.5-year high in their cash markets. ANIC, a private South American analyst, notably in Brazil, talking about their expectations for the October corn exports out of Brazil being only about 5.7 million metric tons, now that we're about halfway through the month. Last year in October, we did 8 million metric tons. So this global drought, I think, is really starting to take hold. And the big question will be, will the USDA change anything in terms of supply-demand fundamentals that takes the trade away from tightening up the numbers and therefore adding price back into the futures and adding price into the cash market? We've done a great job with these world numbers in terms of offsetting a big U.S. supply in the middle of harvest. And I think we need to take a step back. And I told a client this in Indiana earlier this week. He said, should I sell some beans off the combine? And we had just hit some resistance levels in late last week. And I said, yeah, you might want to. If they're overrun bushels, think about the revenue per acre that you're going to be able to get with your yields. And he said, you know, we really can't get a break, can we? And I said, remember last year, or excuse me, in 2014 at this time of the year, we were trading about $9 November beans. So we're $1.30 plus higher than where we were in 2014. And I think we can mainly thank the Federal Reserve policy shift in these tight world grain stocks. So to answer your question more directly, that 249 on the world wheat ending stocks that I'm at versus USDA's 257 plus, not expecting them to give me all of it, but I'd like to see them keep working themselves down. And it'd be great if they hit that lowest trade guess of 252.5. Not sure I'm going to get much out of them when it comes to the corn and soybeans this month.
And it'll be interesting to watch how some of these numbers come in, especially on that world side, as we lean in a little bit more. I want to talk about some of these weather issues a little more in depth with you. And I think about wheat first, just with the Black Sea concerns. That's felt like that's continued to at least support this wheat market, Mike. Maybe not giving us an explosion to the upside, but keeping things, I'll call it, firm. Would you agree?
Yes, this is where the wheat drought or the wheat weather market is a tangible weather market, whereas the corn and beans, we're thinking that we could have a substantial drought. in the corn areas of Ukraine next year, the U.S. corn areas, the South American corn and bean areas right now. But in terms of Argentina, the United States, and Russia, that drought is real. It's tangible. As you see by this Bloomberg headline, a key Russian minister is literally asking farmers to pray for rain because of the lack of it. And this is not just word speak. This is real deal stuff going on. Russian producers, from what I'm hearing, are starting to pull back on their planting, just like we are starting to pull back on our planting in hard red wheat. Oklahoma is 10 points behind where it has been in the 5-year average for planting in this past week's numbers. That didn't show up in the national numbers, but it is starting to show up in the state by state numbers. And I expect Oklahoma to be kind of a leading gauge, and then Texas and Kansas will probably start to follow suit with starting to pull off the planters until they see rain in the forecast. And the other thing I'll say about Argentina, that it's a real deal down there. Even USDA in their weekly crop bulletin, and for wheat specifically, said they saw visible drought damage to winter wheat areas in Cordoba and Santa Fe provinces. Those are two of the biggest, if not the biggest, production areas for wheat in Argentina.
Well, I'm thinking about Argentina. Let's talk about their corn production as well, not just with wheat, but corn here. Another graphic you shared with us. I mean, walk us through some of this production history when it comes to corn for Argentina as you look at this right now, Mike.
Yeah, the bottom flag or ticker covers up a little bit of this presentation, but thank you. That Jesse Allen, he's amazing. Look what he can do.
Let me take the ticker off the video feed so we can fully look at this graphic. That would probably help us, Mike. Please continue now that I have fixed the video feed.
I'm amazed. You're a magician. But Argentina, you're talking about Cordoba province, Santa Fe province. You're talking about 50% of the corn production that is dealing with a significant dry weather event right now. And I will call it a drought in 2 weeks, and it will be a drought that will probably take us into a situation where production will start to go down fairly rapidly, in my opinion, if we don't get the rains expected. And there's about an inch and a half of rain expected in Cordoba province in the next 14 days or so. But what I wanted to call to you guys' attention on the video today is the trend line yields in Argentina. That gray line, that's the 10-year trend in Argentina's corn production in terms of their yields. And it's a steep downtrending line. And I think this is exactly why they just can't seem to get off to a good footing in certain years like 2017, like 2022. And I think this is one of those years where we got to really keep an eye on the idea that their yields could go from 8 to 6.5. And, that's where I'm looking at the 5-year average of 7.1, whereas I think it could be already at 6.5, especially 2 weeks from now. And that would trim that crop substantially, and you'd lose that 51 million metric ton crop and be into the mid 40s to upper 40s at that point. And, we really are at a world supply demand situation where about every million metric tons really matters when it comes to corn and wheat. So this is a real key element. I'm not sure USDA will pick up on this on Friday, but I'll be watching South America's production real closely, especially last year's Brazil production. I still think they need to come down on the corn anywhere from 5 to 7 million tons.
I'll flip charts here just to stick with us for another second. A Southern Hemisphere corn drought index you shared with me. This is an interesting chart to look at, Mike.
Yeah, we've seen a big improvement, but we're still twice as bad as we were last year. And the orange line is last year at this time, and the red line is where we're at right now. The yellow line is the median, the essentially average going back to 1981 to last year. And, we literally are double worse in terms of index problems in Southern Hemisphere, essentially Argentina, Brazil, Uruguay, than we were last year. And we're well above that even in terms of the median. So this kind of is a supporting document to what I just showed you about how significant the drought is in the Southern Hemisphere right now. And I still think that between the wheat drought being the real deal and the potential for losing a lot of corn acres in both Brazil and Argentina if things don't straighten out and planting other crops or not planting anything, I think corn is right there with the wheat. So I still see wheat, corn, beans in terms of price leaders.
We are talking with Mike Zuzolo from Global Commodity Analytics here today on Market Talk. And Mike, thinking about South America too, one thing I want to throw at you, we had a gentleman from Brazil comment on Tuesday's analysis video on YouTube. And essentially his point that he was trying to get across was that the weather issues we've been watching, he says it's not a soybean issue. We'll get beans planted. It could be an issue for safrita corn, that second crop corn, cotton, things like that. And then he was talking about some different things with ending stocks and talking about U.S. production, et cetera. But from my understanding, what I've seen and hearing is that soybeans in South America probably going to get in, but what does some of this dryness, drought concern do more so for a delay to safrina corn in January, February, et cetera, Mike?
Yeah, it's a great question because what you'll see and what we've talked about so far, I've left a lot off the table when it comes to Brazil, Jesse, because it is still early in Brazil. But the point he made, I think, is 100% valid, is that we could see in an odd way bean acres go up in South America with a lower average yield than what we're used to, but bean acres go up. And then we have to wait and see, what does China do? You know, we're talking about a country that is very hard to get a bead on where they're at. I just read an article talking about their dairy situation and talking about their meal situation. Their meal market is down about 30% at this point, and it's one of the worst markets they've had in a couple, 3 years. And it's mainly because the dairy consumption, the milk and cheese consumption domestically is not meeting government expectations and what the producers went out there to provide to the consumers. You've got a real situation in China, and this is going to be a livestock-wide issue, whether it's hogs or whether it's the feed side of the equation. And this takes us right back to meal, takes us right back to soybeans. Do we have bigger acres in South America, lower yield, but then we also see a decline in bean imports by China in 2025? And I'm not saying that. It depends really on where we're at in the price. And really the big question down the road will be, does China have to come to the United States because Brazil has got such a bad crop? But again, that kind of supports the idea of why is the corn rallying against the soybeans right now, and that bean corn ratio in 2025 is already starting to promote a little bit more corn acreage base. That's a key thing to be watching here the next month, month and a half, especially if wheat and corn can lead beans higher in the short term and we get back to that $11 plus level in NOV 25 beans.
Thank you for humoring me on that question and fielding that. I thought that was a good tie into what we were touching on already. I do want to look at this chart, the July D corn spread, kind of wrapping up our grain discussion here today. And I'll make a comment and then I'll let you explain what you're seeing here. But I felt like the corn market right now, futures basis, things have gotten have been a little range bound here to some degree. It seems like more of the volatility's been in soybeans, been in wheat, whereas corn's not really moving much out of its range right now. And there's some decent carry in the corn market. Talk about this for us, Mike.
Yeah, and I think you're seeing some basis plays around the export market, around the feed market, around maybe some ethanol market price action. We did see some really great ethanol numbers on Wednesday, higher production, lower supplies. That's always a good thing during harvest. This spread is something I'm going to put out in front of us to keep a monitor of. This is the July D's corn spread, and theoretically on big supplies. And remember that July will represent the South American crop. Dees obviously will represent our crop here. And so you've got this battle already starting going on where July should be discount to the December. You should have a carrying charge in the market where the Dees has a premium. But if you've got South American weather problems and you're worried about the global supplies of corn right here, right now, you would then want to pull the premium out of the back end and move it to the front end to encourage the supply side, the producer and the seller, to let some more physical corn go. I think that's what we may be seeing here, because if you go and look at this chart in its totality, about a year ago in the third quarter, 2 years ago in the third, fourth quarter of 2022, we were all the way up at a 35 to 55, 60 cent premium in July corn against the December in that July 25 D's contract. Then we broke, and all of a sudden we created this downtrending channel took the premium out of July, moved it into December, and just recently we went to about 15 under, or 15-cent carry. That was suggesting no problems in the world, plenty of supply to meet the demand. Now all of a sudden we're starting to see that July go even, and last week it was 5, 6 plus the December. So I'm going to call this our drought gauge for Brazil and Argentina, that if this July keeps gaining on the December and breaks above that channel of around 5, 6, 7 cents, I think that could be a breakout indicating the trade may be believing this drought is not going away. And so this is going to be a really important chart for me as far as a gauge technically and fundamentally with the spreads and the carrying charge as to whether this drought in South America means anything or not.
All right. Well, we'll continue to follow this with you as we progress through the rest of this year and go into 2025, no doubt. Let's talk livestock. Saw some pressure in futures on Wednesday. Kind of maybe felt like we ran out of a little bit of fundamental support to some degree, maybe more so at hogs than we did in cattle. Let's look at the D's cattle chart. What are some things you're watching right now in fats and feeders, Mike?
Yeah, brand new chart as far as overvalue, undervalue levels. I've moved from October to December now, priming everybody to get those fourth quarter hedges in place. Have already started some in the feeders. I'm going to do more in the feeders and start with the fats now that we've hit overvalue. I think if we look at the end of last week with the strong cash trade, Jesse, that was coupled with a strong rally thanks to China's futures rally in their Hong Kong market, in their hog market following that equity market rally. We had those two things come in and a pretty strong pork cutout value as well, all helping create this really big surge in price. And so we've gone from my undervalue level of about 174 and a quarter up to almost 188, and actually did hit 188 early in the day on Wednesday. So we've had a $14+ rally at this point. And I think that's probably going to be enough at this stage unless we get new bullish news from USDA on the WASDE report. My biggest concerns in the cattle and the feeders remain corn prices and grain prices, hogs in China that start to go down again, and then our U.S. equity markets because our bond yields are starting to go up. I would also say a lot of the bulls out there have said, yeah, but look at our supplies, they're going down, down, down. Well, that's true a number of head, but our weights are up 38 to 40 pounds versus last year at this time, and our year-to-date production is down only 0.7 of a percentage point versus last year at this time. So lighter numbers doesn't necessarily mean less production because of these weights.
Good thoughts. I should ask you, hogs-wise, this just popped into my head too as we're kind of closing out the show today, but I feel like some of the continued Chinese-Taiwan tensions maybe on display again here this week with some holidays and things like that, some of the Chinese economic concerns. I have a feeling that could be an underlying play in the hog markets here over the next several weeks, Mike. What do you think?
That's an excellent point. Those pork exports have been a friend of ours pretty much all year long, and it's kept our cold storage numbers down and manageable. And it's kept the processing going in terms of not backing up and slowing down chain speeds. I think what my biggest concern is, as a political scientist, as a historian, I would say I am most worried, to your point, about getting sucked into a bigger Middle East conflict with a lot of military assets from the United States in the Middle East and Red Sea. And then we see mainland China move on the Taiwanese. Because they have talked about it, and they've talked about it very recently about joining back together. And I think this is a really tough time. And this is one of the reasons why a lot of people are talking in my field about a commodity super cycle and a really long-term low right now, Jesse. I want to believe that because of the prices. I want to believe that because of the demand. But if you have the world's largest commodity buyer and consumer as potentially a military foe, how do you square that circle? And that's really a yet to be determined and something that I want to look at more and more in detail and analyze. But right now, I can't get a commodity super cycle in my mind yet because I see China as an issue with messing with commodity demand, not helping to support it.
Final thoughts. Been a great discussion today. I know you've had a lot of great stuff as always. I've thrown a few extra questions at you to make this interesting here today. So let's sum this all up, Mike. What do you want producers to really keep in mind here this week?
we still got the dollar, we still got the crude oil. Now I want to see the world wheat number shrink a little bit more, and then we can get maybe a little bit more footing of not having to worry as much about tearing down the building blocks that we built up in this wheat market like we've done 5 or 6 times over the last year and a half.
If folks want to reach out to you, take a look at your analysis, have a conversation and more, Mike, where can they reach you?
globalcomresearch.com. That's globalcomresearch.com. And I will be adding more visuals and graphics to your wonderful video and sending that out on the blog tonight. So it's worth subscribing. Get a 2-week trial on that website.
We have no shortage of fun when Mike Zuzolo is on the show. globalcomresearch.com. Great conversation as always. Mike Zuzolo, thank you for joining us here this week. Have a good one. We'll talk to you next week.
You do a great job, Jesse. You're the one. Thanks, sir.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.